Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is May 19th, and we are going to go through your daily financial news. Again, this is something we do every day, 7 days a week, 365 days for over 3 years. So if you want to see what we were talking about last year, just go ahead and search on my channel, and you can see we're not always right by any stretch, but we have been running pretty good here recently. So lots of things to talk about today. First and foremost, I am so happy to hear, see, and read that many of you are really digging into the 50-40-10 program that Stephen Dow from Velocity Mortgage brought last week. I think it is a very creative program. As you saw with the lumberjack, it is a way that you could take an average deal, his case 21%, and make it 52% with real numbers. As you are undoubtedly seeing, the hardest thing to do is find a seller who could say yes. It is my belief that the seller needs at least 50% equity to say yes to this deal. So going to a seller who just bought their home, it is not going to work. So again, I'm doing my best to bring on people that can help you do this. First, I want to remind you, and again, I will put this in the show notes, but some of you don't read the show notes. So here you go. I have worked with PropStream about a year ago, and I'm inviting them back. PropStream gave us a trial that gives you 7 free days and I think 50 addresses or something like that. So if you're one of my followers or one of my students, please get the trial, put in your buy box, and start playing with the variables. Second, I have a playlist. I think I called it Big Data because that's what really PropStream is. It's a data lake that aggregates dozens of sources of information. So that's what I called it. I will see if I can rename it to PropStream, which is what it should have been called. But anyways, I strongly suggest you use this tool. It allows you to input variables that could find sellers that might be open to something like this. Also, in my course, you have a conversation with Bob Langworthy, a CPA, about the ramifications to a seller for seller financing, and they are good. Less taxes, income, things of that nature. So I will read this for you just in case this is too small. It is https://trial.propstreampro.com and then /ORAAT stands for one rental at a time. Again, what am I doing? So tomorrow, I have my guy, Adam, who helps me with my use of PropStream. I'm going to interview him tomorrow, I think at 10:15, to show you what we are doing, because we are doing this 50-40-10 without question. We are going fishing, so I will bring you up to date on that. And second, I've reached back out to the PropStream team to have them come back on because I think this recession, this slowdown is going to allow you and I to go fishing for motivated sellers. So why not use the tool of choice? Go play with the trial. You've got a weekend coming up. Go see. Worst case, first off, if you're one of my students or followers, go do the trial just to figure out how many homes are in your buy box. If you go back to the playlist called Big Data something, you see that I did that in one of the videos, and I was shocked at how many homes were in my buy box. So again, this is for you. I'm trying to make it easy. It is simple, but not easy. You got to find a seller that has equity, and then you have to communicate with them. So again, there you go. Cisco, we talked about it over the weekend, and I've said it before, and I'll likely say it again. Cisco Systems is the technology bellwether that always tells me what is going on rest of world, what is going on Asia, Europe, things of that nature. Well, it's not good, folks. Folks, it is not good. You can clearly see, given their disappointment and their reduction going forward, the reduced forecast, the rest of the world is not doing well. I told you, Asia recession, Europe recession. Cisco validated my opinion. Doesn't feel good to be right, but if you take action and you get prepared, you will see it. So my suspicion is Cisco is a real clue about what is going on rest of world. Folks, we have seen in the stock market an adjustment to higher interest rates. I believe what is going on right now, a la Cisco, is a realization that the world is not in a good shape. We are having a growth scare. The next leg down, yes, folks, I said down in the stock market or assets is going to be because of growth. Again, what we have seen with interest rates is we have seen price to earnings multiples collapse. They went from 26 to 17. What we will see in a growth scare is more and more and more companies like Cisco cut forecasts. Then we get smacked with the recession. I stand by still 3 months later on my 2022 and 2023 whiteboard. It says we are in stagflation, and I will have you know we said that months ago. That is what this year will be. It is too early for a recession. We have too much forward momentum, but boy, we have got one coming. We have two prominent speakers talking about stagflation, with Janet Yellen admitting that with food and energy, stagflation is a very likely outcome. Other things that we got today. Oh, let's talk about my buy box. Everybody likes to talk about theirs. I wanted to give you some numbers of mine. Folks, my buy box has increased 55% in how many days is this? Let's call it 68 days. 68 days. That's crazy. But remember, percentages can be misleading, and you will see lots of fear in the real estate YouTube world with facts like this. So let me give you the facts. On March 7th, we had 602 of active listings. 602. All right, cool. Now, as of yesterday, May 18th, we had 933. Bingo, bango, the math is 55% increase in 68 or 69 days. Remember, I just did a video with someone in Fresno where we reviewed the current month with 2018. 2018, a year where we had 3.3% month, which we weren't even at five months supply. We had 2,846 active listings. So yes, folks, 933 is an increase. Get back to me when we are 300% higher. Folks, it is just math. The real estate slowdown is real. I've been bringing it to you. People are seeing it now. But this is not falling off a cliff. 933 active listings, which we had yesterday. It's like 21 days of active inventory, 22 days of active inventory. So again, pretty interesting. So let's go back to some other things that we have seen. Let's talk about Home Depot and Walmart. We talked about the K-shaped recovery. We just talked about the K-shaped summer. Remember that yesterday? Again, if you are in the top end of the K, you are going to party like it's 1999. If you are in the bottom end of the K, you are trading down to store brands. You are eating out less. Your discretionary income is zero because of inflation. I wonder if Home Depot and Walmart earnings are simply a representation of top end of the K, bottom end of the K. I don't know this for sure. I don't know if the data is out there, but I think it's fair to say that most people that go to Home Depot, most, not all, most, own a home. I think that's reasonable. What about Walmart? Do you think most shoppers at Walmart own a home? I don't know. I would argue that more people own a home percentage-wise that go to Home Depot and Walmart. So I don't know if there's a story there that we really do have the K-shaped recovery, the K-shaped summer going on. So back to Cisco, we got some guidance. Again, they hit the bottom line, so earnings per share. They missed top line, so revenue came in light. But They reduced the forecast, which is not good for a growth company. Not good. And that is a sign that I think is coming. Again, Cisco is the bellwether for me in Silicon Valley. If Cisco said this, why won't HP? Why won't IBM? Why won't all of these others who have true rest of world sales teams? A lot of technology doesn't sell in Asia or Europe. They focus on North America first. But when you are a mature technology organization, you have sales teams around the world. Not good, not good. Turns out Americans are stressed about money. Does this shock you? This does not shock me. 87%. That's like 7 and 8. 87% of folks say inflation is causing stress. Yeah. 40% say money is impacting their mental health. 40 say a comfy retirement will be a miracle. Folks, if you watch my channel, here is my advice. I've said it before. I will likely say it 100 more times. Do not focus on income. Do not focus on net worth. You, right there, yeah, I'm talking to you right there, need to focus on disposable income. Disposable income is the only number you should worry about for the next 3 to 5 years. 1, do you know what your disposable income is? 2, double, triple, and I would argue 10x your disposable income. Disposable income is money you could light on fire and you would not notice a difference in standard of living. Your job after 5, 10xing your disposable income is to buy cash flow assets that feed the flywheel. This is why Dion talks about 10 years to financial freedom, make work optional. This is the snowball to wealth. Folks, step 1, disposable income. I do not care how much money you make. You want to impress me? Grow your disposable income. I know people personally who make 7 figures a year that can't rub 2 nickels together. I know people that make less than 50 grand a year that save 40%. It should be obvious who I respect, admire more. And it ain't the 7-figure income. Lots of people can do that, and every idiot can blow the money. Don't do that. If you are following my channel and you want my advice, the only number that matters, disposable income. Focus there. Jeremy Grantham is now on the one rental at a time train. He is saying we are repeating the 1970s. Sorry, folks, I've been telling you this for a year. He now says that we are in the everything bubble and that we could see much, much larger drops in the market. Let me see. I know I wrote them down. Here we go. He said that the markets could fall another 40 to 50% and repeat the 80% drop that we saw in the dot-com crisis. He said that the bubble we are in today is bigger than the dot-com crisis, and I have been telling you that actually for quite a while. What else do we got? Wingstops. Wingstop, the wing fast food joint, they actually said they're seeing price deflation. Apparently, lots of people are buying chicken breasts, which is allowing them to buy wings cheaper. When was the last time you heard a company say they're getting their stuff cheaper? Wingstop said last year it was $3.22 a pound. Today it is $1.63 a pound. So hey, at least wings should be cheaper. I actually haven't been to a Wingstop in a while. Let me know if you go and if the wings are cheaper. They should be. Here they are. Here are the numbers. NASDAQ could go down 75%, S&P down 45%. Again, Jeremy Grantham. What else do I got for you? I guess the last thing to talk about is real estate agents. I'm getting a lot of, hate from real estate agents. I don't know why. I'm just giving you my reality. I believe real estate transactions fall 25% this year, 50% year to year. Some of them aren't hearing me. Some real estate agents are hoping for a crash. Did you know that real estate agents after the Great Recession, once we got through the rollover, actually did quite well. Many of them did foreclosures and short sales. What real estate agents hate is what I see coming: less transactions, less churn, less move ups. You saw Matt, the mortgage guy, on Wednesday do a real life example for him and his family that his payment would go up 300%. 2 miles away, better school district, another bedroom, better backyard. Trust me, you are not moving up if your payment goes up 300%. Shoot, you are not going up if your payment goes up 200%. So again, folks, lots going on. I do want to say congratulations. I forgot to do this the last 2 days, so I put this here. Come here. My nails are not long enough. Hey, get over here. There we go. Sorry about that. It's a little bit of struggle. I want to congratulate Jeff and Heather. Jeff and Heather, I should have sent you this 2 days ago. I forgot to congratulate you. I wanted to do this before I do, so it stamps on it. It will go out in the mail today. Jeff and Heather, congratulations. If you don't know what this is, it is something I send out anyone, yes, anyone who closes their first or next real estate property and says, hey, one rental at a time, you help me. I read your book. I watch your channel. You don't have to be a student. If you are, of course, that is great, but you don't have to be. I am trying to track my impact. I'm trying to help 1 million people before I die. So come be a part of the journey. Let me know. DM me address, and I will send you a card just like Jeff and Heather. Take care, everyone. Bye. And again, trial.propstreampro.com/ORAT. Go figure out what's in your buy box. Go play with percent of equity. The 50-40-10 is going to be an amazing program. I will be using it. I will bring you my team tomorrow, show you exactly what we are doing. Because again, I do what I say. So I will hopefully bring him to you tomorrow. Adam, if you watch this, don't forget, we're meeting at 10:15. Bye.